Welcome back to Over the Horizon. Today I'm here with CJ, the Bitcoin Treasury Manager over at Strategy. CJ, how's it going?
All good. Thank you for having me, Joe. Super excited to have this discussion with you.
Absolutely. Yeah, so you and I met in person for the first time in May at Strategy World. Obviously, a lot has unfolded since then. Bitcoin, went on to reclaim a brand new all-time high. Lots has happened with Strategy. You guys have launched an entirely new suite of different fixed income products, which is extremely innovative, and I'm excited to dig into it. But first things first, I want to hear a little bit more about you. So recently, obviously, you transitioned from Harvard Business School to working full-time at Strategy. So what's your day-to-day role in the Bitcoin Treasury team look like, and how has the team grown and changed since you first joined?
Yeah, so Strategy World in May actually marked my first week transitioning into the full-time role. So it was a nice way to sort of end that interim transitionary sort of internship phase, which I did for a year, and then get into the full-time role. And I've slotted into the Bitcoin Treasury team. My official title is Treasury Manager, but I'm effectively working on all things Bitcoin related. And that basically spans across capital markets, investor relations, treasury, and Bitcoin advocacy. And capital markets is effectively all the capital raising we do via the IPOs, via ATMs, strategizing around how we want to do it, when we want to do it, what new security we want to design. Next is the investor relations. So, speaking with existing investors, speaking with new investors, speaking with equity research analysts. So lots to learn over there, lots to grow over there. Third is the Bitcoin treasury piece. So actually, purchasing the Bitcoin with different exchanges, custodying the Bitcoin with different custodians, managing the risk over there, making sure everything is in place, all the controls and processes. And the Bitcoin advocacy piece, which is, just attending different conferences, a lot of supporting work for Michael and Fong as they attend different conferences and give different keynote presentations. For me, that's personally been one of the most enjoyable parts, getting that interaction and FaceTime with Michael and getting to learn how he thinks about these different presentations and seeing the building blocks that go behind it. And that's broadly the work. And the team is, the finance team is a 4-member team. You might be familiar with Shirish, who is the corporate treasurer and his investor relations head. So he's kind of effectively my manager. And we have 3 more members of the team, Charlie, Bhakti, and Nikhil. And Ella is joining our team soon as well. You might be familiar with Ella Huff. She'll lead more of the Bitcoin advocacy work. And apart from the finance team, we work very closely with the legal, accounting, tax teams on all things Bitcoin related too. So, it's a large organization. Strategy has about 1,500 employees, but the core Bitcoin team remains very small and nimble, about 10 to 20 people. And yeah, it was kind of a dream role for me. When I came to the US to do my MBA, I was, very familiar with Bitcoin, very familiar with strategy as a company or MicroStrategy back then. And I wasn't familiar with Shirish being the manager over here or being the one kind of responsible for the day-to-day Bitcoin strategy and operations. And the funny story is that we both went to the same undergrad university in India. And he's obviously many years senior to me. I had no idea who he was when I was in India, but as soon as I found out, I kind of reached out to him and pestered him for as long as I could to give me an internship offering to work for free. And somehow he gave in and things just went from there.
It's fantastic. It's awesome to hear. And it's ultimately one of the great things about the Bitcoin space, and I'm sure you can agree, is that a lot of it comes down to proof of work as much as it does credentials, right? Ultimately, you have folks working in the space. You are part of I'll call it a cracked team. You're part of a very cracked team when it comes to the folks you work directly with, Harvard graduates, Cornell graduates, but also there are a great deal of folks in the space and, that don't have kind of that Ivy League education. Can you speak a little bit to proof of work in the Bitcoin space, kind of compared to working in fiat where it's more so totally credential driven and you have to work your way up the ladder? I mean, if you were doing this position at any other company, corporate treasurer, chances are it'd be several years until you'd be working the job that you are now. And so can you speak a little bit about the differences between working in Bitcoin and working in fiat?
Yeah, it's super interesting you say that because the previous role I had was, in private equity at Blackstone, which is, in some ways you could say is the mecca of the fiat driven, leveraged buyout world. And that was very credential based. It was a small, nimble team again. Back in India where I was working, uh, performers, high achievers, great team doing great work. But to get in over there, it was all kind of driven based firstly on credentials, And only after having the credentials was I kind of able to break into that team based on obviously some personal merits, I hope. But I do agree that the Bitcoin world is very, very different. It's much more democratic and open to everyone. And all it takes is, as you said, proof of work. And that's the advice I got when I kind of reached out to everyone 2 years ago or 1.5 years ago now, trying to get a Bitcoin internship opportunity in the US. And everyone said that, you seem to have good credentials and you seem to understand Bitcoin, but what have you really done in the space? And then I started thinking about writing a bit more, publishing a few things online a bit more, just letting Twitter also be kind of my stream of consciousness. And that's the advice I give to anyone who reaches out to me now as well, that it's a very open democratic space and it allows anyone and everyone to come in with their own relevant expertise and background and bring, a unique voice, unique point of view, unique analysis to the Bitcoin world. And then, things can build from there. And we've seen so many people kind of enter the space, perhaps just in the last 1 or 2 years, relatively new entrants in the Bitcoin world, cohort of 2021 bull market, or whatever you call it. And everyone's made a mark, or a lot of people have made a mark. And it's just about that, as you said, do the work, and then the work speaks for itself. And yeah, I'm super grateful, not just for that, but I feel like proof of work is one thing. And then the other thing is just the way the network operates in terms of people as well, where everyone is so helpful and so open to have a conversation and guide you to the right path. I actually remember the first person perhaps I spoke with when I came to the US looking for a Bitcoin internship is Smeeth Bhatt, who is obviously you will be very familiar, is one of the co-founders of Horizon and of Thea. And I am, a huge admirer of Smeeth and of the work that you and the team do out there. And he was the one who told me that, reach out to more people, network more aggressively if you can, and dream big. Dream for getting an internship at a company like MicroStrategy or maybe some of the other larger Bitcoin mining companies. Use a financial background and use that as the gateway to get in. And if not for that one conversation I had with Smeeth back in 2023, I don't think I would be where I am today. So I owe a lot to him. And I'm super, super grateful to him and to a lot of others in the Bitcoin community who sort of showed me the light.
That's wonderful. That's such a great story, and ultimately, it should be hugely encouraging for anybody watching this who may be considering the exact same move, right? Whether you are from the U.S. or not, whether you are Ivy educated or not. I mean, I came from a state school, and my inroad into Bitcoin was similarly, a friend of mine who was working in the space, went to my alma mater and had kind of encouraged me down this road. I started publishing my work, in a very open fashion. You talk about using Twitter as your stream of consciousness. It's the exact same phrase that I've used. Essentially, using it as your living and breathing resume, publishing your research, showing that you can do the work, and then ultimately good things will come, and your career ultimately does compound on itself in the Bitcoin space more than anywhere else, right? So taking it back to strategy, we have a really long-ranging discussion ahead of us. I'll try to keep it as succinct as possible because there's so much to talk about. First things first, I want to talk about the metrics of Bitcoin treasury companies. What you're doing with strategy and what other operators of Bitcoin treasury companies are doing is essentially, unveiling all these brand new KPIs and really shaking up corporate finance and the way that people think about corporate finance, but also the way that people think about public companies, treasury strategies in general. And you and the team have really come up with a brand new gauge for a business's health and its performance relative to the other areas of the market, namely Bitcoin yield, Bitcoin per share, and MNAV as an indicator. So I'd like you to speak a little bit to these metrics and their utility. You can kind of go in whatever order you'd like. And they're, you can analogize to indicators that are already out there in terms of traditional corporate finance and explain why it's important to have these different metrics as a Bitcoin treasury company.
Sure. I think if we go chronologically, the one that we published first, which was in the summer last year, I believe, or Q3 last year, was Bitcoin yield or BTC yield. And that just measures the change in Bitcoin per share period over period. And the reason we primarily did that is to explain the benefits of the accretive dilution that come via the common stock equity ATM. And the idea is that, in the traditional world, if a company is issuing new shares and raising more capital, it's diluting shareholders. And that could have, long-term positive effects or negative effects based on how the company uses that capital that's raised. And for strategy, it's just one purpose, right? Or primarily just one purpose, just buying Bitcoin with it. And as long as the issuance of the shares is happening at a premium to the underlying holdings and the capital is then being used to buy Bitcoin, the end effect is that the increase in Bitcoin is more than the increase in the number of shares. So the Bitcoin per share in the original state is lower than the Bitcoin per share in the end state after this transaction via the common stock equity ATM. And the dilution that's happened because shares have increased is not important. What's important is the accretion that's happened in Bitcoin per share terms. And as a shareholder holding the same amount of shares as you were earlier, your shareholding in the company in a percentage term has gone down, but the Bitcoin per share that you see, the exposure to Bitcoin that you see as a shareholder has gone up. And that was the main thing that, we had to simplify and communicate to the market. And that is what Bitcoin per share is. And then the change in Bitcoin per share in any period is Bitcoin yield. So for reference, in 2024, the full year, the BTC yield or Bitcoin yield was about 74%. Meaning if at the start of the year you had one Bitcoin per share, by the end of the year, effectively your exposure net was 1.74 per share. And all of this common stock equity ATM issuance is beneficial to you as a shareholder that cares about long-term performance and long-term returns, where you as a Bitcoin maximalist perhaps denominate your own life and your own returns in Bitcoin terms. So that's the broad idea with Bitcoin yield and Bitcoin per share. And then when you take it one step further, you want to ask yourself that how do you quantify this gain or benefit that's being achieved for shareholders in dollar terms, so that it's comparable to dollar earnings and dollar performance of other companies that are, S&P 500 companies or just any other investment that a traditional investor might make. That's not a Bitcoin maximalist investor denominating everything in Bitcoin terms. And even for the Bitcoin maximalist investor, perhaps, in a shorter time frame, you do care about dollar performance, dollar returns, dollar results. So that's where Bitcoin dollar gain comes in. And what Bitcoin dollar gain really means is if we are issuing $100 million of equity via the common stock ATM program at a 2x MNAV, and we take $50 million of that capital raised and we buy Bitcoin, and we just assume the remaining $50 million was wasted or doesn't exist anymore, then the Bitcoin per share would not have increased. The Bitcoin yield would be zero. If we take the remaining $50 million as well and use that to purchase Bitcoin, then all of that would be accretive to the existing shareholders. The Bitcoin per share would go up, BTC yield would be generated, and that entire $50 million would in some way be captured as a gain for the benefit of all shareholders, which can be thought of as a proxy to earnings, which throws through the P&L or income statement of a company. So the idea is by using this equity program, you are able to increase the book value per share without flowing it through the P&L or through the income statement as earnings. It's still a net gain. The book value per share is still going up in dollar terms. And how do you capture it? Your traditional accounting in the fiat world is not capturing it and not letting you communicate that to investors. And that's what Bitcoin dollar gain is. What is the net benefit for existing shareholders without dilution in terms of their, Bitcoin holdings? So those are like some of the initial KPIs, but happy to take it in the direction you believe is appropriate.
Of course. Yeah. So on that last part, and this is really where the innovation comes in my mind, I'm of the belief, and potentially you are as well, that obviously Bitcoin is a hurdle rate, meaning if any investment can't yield higher than Bitcoin's compound annual growth rate, it's not a worthwhile investment. That hasn't been reflected in traditional accounting rules whatsoever, right? For the longest time, strategies, any gains on the Bitcoin that it held could not be marked down as earnings. However, losses on the Bitcoin could be marked down on the balance sheet. And that's frankly absurd to me. Thankfully, those rules have now changed. And in quarter two, you guys actually had the biggest earnings beat ever in Wall Street history. I did a deep dive on this. I'm very grateful to have access to a Bloomberg terminal. I looked through the entire Rolodex per se of earnings beats versus earnings misses. And you guys had a 1 or 2 or 3 sigma beat over the next best in the competition in terms of earnings beats. And so ultimately, like, accounting is being totally reworked around this reality that the most profitable thing a company can do is buy Bitcoin. And now by being able to mark those Bitcoin gains as earnings on the income statement, it's kind of a huge game changer. This financial innovation you guys have started at Strategy has really snowballed and made a massive change in accounting rules. And I believe this is just the start of a going trend for companies on Wall Street who will also begin doing this exact same strategy. Would you speak a little bit to whether or not you kind of agree with that statement that the most profitable thing a company can do is buy Bitcoin? And if this rule change in accounting is now a step toward more companies on Wall Street recognizing that reality?
I think I'll answer your second question first, which is definitely the hurdle for a lot of different companies in the US and elsewhere was the accounting treatment. And it was super prejudicial, where you could only mark the losses and you had to mark the losses under the intangible impairment accounting, but you could not mark the gains. And it would just mess up your entire accounting. And no company wants to just make losses on an investment and never make a gain that they can reflect on their own books. And that hampered a lot of different institutions and corporates from looking at it. And I think Strategy and a lot of other Bitcoin players played a huge role in advocating for that change and getting that FASB accounting change to be put in place, where now you can mark to market the Bitcoin holdings and record the investment gain or loss depending on the closing price of the Bitcoin sort of asset at the end of the quarter. And that, along with a lot of other institutional milestones, I think has, opened up the space for a lot of Bitcoin companies. And now you've seen that, we've gone from 3 or 5 Bitcoin treasury companies 2, 3 years ago to over 150 Bitcoin treasury companies across the world. So it's partly due to the accounting change and partly due to, just seeing the success of Strategy also, and seeing how we've pioneered this new playbook, and you can generate shareholder value in this unique way using an operating company, buying more Bitcoin, levering it up, capturing the market premium and whatnot. So yeah, super influential, super important, along with a lot of other institutional milestones as well. Another big one I would say, uh, kind of tangential to what we're discussing, is but just the opening up of Bitcoin as an asset class for the banking industry. And we've still not seen huge leaps being made by the large, too big to fail banks. But I think we'll see that in the next 6 to 12 months, where the JP Morgan is custodying Bitcoin and offering a lot of Bitcoin based solutions. I know that they recently announced a big thing with Coinbase, I believe. Maybe it was Chase and Coinbase, where you can kind of flow through one system to another very easily and seamlessly. So I think the progress over here is just going to be very, very fast. And it's just because of the Trump administration looking at the industry a lot more favorably, a lot of different institutional milestones being met. And we've just crossed that dark phase where people could be skeptical and be scared that Bitcoin will get banned or Bitcoin is too good to be true. And we've crossed that for sure. Then to answer your first question, if I remember correctly, you were asking if Bitcoin is the best thing or the most profitable thing a company
Most
could do.
profitable thing a company can do.
Yeah, I don't know if I would necessarily frame it that way. I would say Bitcoin is the best way for an individual or a corporate to store value for the long term. A company that has a profitable existing business, the way they would make decisions to invest more into their business would depend upon the return on invested capital that they would see. And the framework that you would have or you should have is, what is the expected return of Bitcoin over the next 5 to 10 years, if you consider that to be the investment horizon for Bitcoin? And how does that compare to another investable project in-house or an M&A opportunity? And then, the opportunity cost should be Bitcoin. And that's the way I would frame it. So maybe there are more profitable things you could do as a business, and maybe you should do them, but there would definitely be a space for these Bitcoin treasury companies to exist in each jurisdiction across the world. And you would see these local champions emerge everywhere, as Michael Saylor frames it. And they would perhaps, perform exceedingly well. They would outperform Bitcoin, outperform all the other listed companies perhaps in the space. We just today published a stat online that since adopting Bitcoin on August 10th, 2020, MicroStrategy, or MSTR, is the best performing publicly listed large cap stock in the US. So, it's incredible performance, 90% annualized returns. And that is one benchmark or one sort of hurdle rate you can think of. But I think the realistic hurdle rate is the Bitcoin hurdle rate, right? So maybe you're anticipating 30, 40% returns, and you need to benchmark and compare to that.
Absolutely. Yeah, perhaps too reductionist of me to say Bitcoin is the most profitable thing. Obviously, there's nuance, and being an absolutist is certainly never a good way to be a financial operator. You framed it extremely well. Any investment you make, Bitcoin is the opportunity cost, extremely well said. So I want to talk about that last point that you just mentioned, Strategy being, the best performing large cap US listed stock over that time frame. S&P 500 inclusion is kind of knocking on the door. Can you give any insight into Strategy's S&P 500 inclusion, potentially what that could do in terms of the inflows into the company? Obviously passive index funds have basically taken over Wall Street and, all of investing over the last 5-10 years. We're talking about retirees, pensions, endowments. Obviously the spot Bitcoin ETFs have seen huge success, but from a company standpoint, being included in the S&P 500, what could that do for Strategy in terms of passive inflows? And how are you thinking about that over the next 5 to 10 years?
Sure. So I think, definitely being included in the S&P 500 would be a very, very big milestone for the company, just in terms of validating the strategy and the huge success that we've had over the past 5 years. What it would also do, as you said, is open up all of these passive inflows into the stock. It would depend obviously on what the weighting is for MSTR within the index, which would depend upon the market cap of strategy at the time of the inclusion. And there's an interesting thing over there where Tesla, when they were included in 2021, I believe they weren't included in the first quarter. They were eligible to be included. They were included maybe a quarter or so after that. And you saw a lot of front running happen from a lot of different investors anticipating that inclusion and the resulting inflows. And that bids up the market cap. And the higher the market cap at the time of inclusion, the higher the initial weighting as well. So a lot of interesting dynamics at play over there. It is difficult to, I actually haven't looked at the details. I don't know what the anticipated inflows might be and what the resulting increase in the market cap or the price per share might be because of that sort of inflow. What we do know, empirically is that when MSTR was included in the NASDAQ 100 index in December of 2024 last year, there was a lot of positive sentiment around that. And, or maybe it was November last year. I can't remember the date exactly. So there's that. Yeah, we do know that MSTR is eligible right now based on the different thresholds, the last four quarterly earnings, the liquidity in the stock or the daily traded volume, the shareholding and the public float, and these different metrics. But it all rests upon the final decision made by the committee of S&P, and there's no way for the company or outsiders to know until the fact. Like only after they announce if a company is included or excluded do you know what's going to happen. And I believe they announced that on the first Friday of the last month of each quarter. So the first Friday of September, and then December and March and June. So I guess we'll just have to wait. We'll have to wait and watch when they decide that S&P 500, the index benefits from including MSTR. Eventually they'll have to see that the NASDAQ 100 perhaps is performing much better because of their openness and inclusion of Bitcoin treasury companies. And the index does not want to fall behind. And, it's the S&P 500 that needs Bitcoin, and that needs Bitcoin treasury companies. It's not strategy or Bitcoin treasury companies that need the S&P 500. The same as Bitcoin. Bitcoin doesn't need Bitcoin treasury companies. It's Bitcoin treasury companies that need Bitcoin.
Absolutely. And I was going to ask this toward the end, but you bring up a very good point there at the end. Ultimately, all these entities need Bitcoin, but not the other way around, right? Bitcoin exceeds in its own right as a result of the fiscal and monetary situation we face in the US and also globally, right? Ultimately, debt loads are so insurmountable that the only solution that that country's central bank has is to monetize it in one way or another over a short time horizon or a long time horizon. That's the situation we find ourselves in. Bitcoin succeeds regardless of the people adopting it, but eventually every single detractor comes around to it. Recently, Harvard University, your alma mater, its endowment recently purchased $117 billion, $117 million worth of IBIT. Brown University made a similar purchase. Ultimately, these were firms, and economists still work, not firms. These were institutions, and economists who still work at these institutions still rag on Bitcoin, yet they're purchasing it for their endowment. And so clearly, that dynamic you just mentioned, Bitcoin doesn't need these entities need Bitcoin, is really on full display. And it's also on full display with folks like, JP Morgan Chase, right? Jamie Dimon. Jamie Dimon, obviously a very verbal, outspoken detractor. He's now coming around to it. Larry Fink, obviously an outspoken detractor of your. He's now doing shows talking about the utility of this thing. And, obviously IBIT is the most successful spot Bitcoin ETF, obviously BlackRock's issue there. And so over time, do you feel like every single detractor for Bitcoin in one way or another bends the knee, per se, at some stage, in that, essentially that notion that everyone buys Bitcoin at the price they deserve, that's something we'll continue to see over the next several years and decades, that institutions slowly but surely all cave and adopt this as some kind of reserve asset?
Yeah, I fully agree with that view that everyone gets Bitcoin at the price they deserve. And there's another saying as well. I think Michael Saylor said it, and I don't know if he's picked it up from someone else, but eventually there'll be a time when people have more to fear from not embracing Bitcoin than they do by embracing it. So for the longest time, people had, they saw career risk and reputational risk from being the decision maker at a large traditional institution by vouching for Bitcoin or by pushing for Bitcoin to be added on the balance sheet. And little by little, you see that, falling away. and it's one institution at a time. And I think it's a great big leap forward for Harvard's endowment fund to buy Bitcoin. I think it's the largest Bitcoin holding across any of the endowment funds. And I said this previously as well. I think it's not Harvard's professors or Harvard's students that need Bitcoin. All of them are, most likely going to do exceedingly well in life. They've perhaps also come from good backgrounds and have done well before as well. They don't have the need to know, and they will continue to remain skeptical about Bitcoin. But Harvard's endowment, I think, has a different role or different kind of context that they find themselves in, with the battle with the Trump administration, with the cutting of funding, and with just the need to find a better way to store value for the long term, for the institution to survive for 100 years. Maybe it makes more sense that they are the ones who found Bitcoin before the economists or the professors or the students. And I personally, at Harvard, had such a frustrating time looking for friends to be made in the Bitcoin world. Like I thought, this boy coming from India who's like dreaming about the US and dreaming about Bitcoin and meeting people, Bitcoiners in real life for the first time. And I come to Harvard and I meet absolutely no one who's interested in Bitcoin. In a batch of 2000 across 2 years, I find like two people interested in Bitcoin at the MBA program. So it was very disappointing. And I don't know if that changes very quickly either. But I think the endowment purchasing Bitcoin is a very positive step forward.
Absolutely. It's a massive shift in the Overton window. And I'll say, if I knew you were in Cambridge, I would have come down the road and been a Bitcoin friend of yours. That's fantastic. I want to pivot into, and I fully agree, I want to pivot into talking about the new suite of preferred stock that you guys have unveiled over the last several months. This is the type of financial innovation that really gets me, has me, doing all these different diagrams and figuring out what corners of the markets these things hit. You guys have done a wonderful job during each of your earnings calls and presentations at showcasing the different corners of the market that these tools are designed for. So I guess we'll talk at a high level and then we'll get specific. Why have you guys begun creating these different, fixed income instruments via these perpetual preferred equity offerings? And what are you aiming to do by offering these? Kind of teeing this one up for you. I have a sense of why you're doing this, but I'd like you to kind of explain to the viewers the strategy here from moving to convertible notes to also offering these preferred shares.
Sure. I think it all comes down to the idea of wanting to structure MSTR, the common stock, to outperform Bitcoin over the long term via intelligent leverage. And another way of saying it is that, the company found Bitcoin in August of 2020 at a moment of desperation when the rates went to zero post COVID, and there was $500 million of capital of cash on the balance sheet that was yielding effectively zero. And Bitcoin was a solution. And that got us out of the desperate moment. And then the company opportunistically acquired some more Bitcoin using cash flows and some convertible debt, because the stock became very volatile after acquiring Bitcoin. And you can monetize the volatility by issuing this convertible debt, because the conversion rate is super valuable because of that underlying volatility. And then after being opportunistic and after seeing the performance of Bitcoin, seeing the performance of the stock, seeing the stock outperform Bitcoin, we realized that, we have this huge market opportunity of securitizing Bitcoin into Bitcoin backed equity and Bitcoin backed credit instruments, because a lot of capital in the world, managed by a lot of different institutions and funds, cannot access Bitcoin, the commodity, or spot Bitcoin ETFs. They need Bitcoin backed equity and Bitcoin backed credit. And what we are able to do as a business is issue this Bitcoin backed credit that is stripping away part of the performance of Bitcoin, offering a fixed yield, but it's also stripping away the risk because it's over collateralized, and it's stripping away the volatility, and it's feeding all of that into the common stock. So the common stock, because of this leverage, becomes more volatile and generates performance greater than that of spot Bitcoin, and also hence has more risk than just owning spot Bitcoin. And that's the broad idea. And when we went through this evolution and we started with convertible debt, and we did a margin loan where we posted Bitcoin as margin, borrowed against it with Silvergate. And we also took a senior secured loan where Bitcoin on a balance sheet was encumbered, and there were some covenants and restrictions around what we could do and what we had to maintain and meet on a quarterly basis. We kind of learned through that, and we came to the realization that a more intelligent form of leverage is preferred equity, because it stretches the maturity of the convertible debt, which maybe has a maturity of 5-7 years, or of other forms of debt, into like an infinite maturity instrument, because there is no principal redemption date. And it is, more importantly, freely tradable on NASDAQ. It's an SEC registered security. So any retail investor, institutional investor can buy and sell it. So it's a lot more liquid. The convertible debt was a very illiquid market. And because it's illiquid, the price discovery is lower. And, it doesn't, we believe it would not trade fairly. It would be underpriced and undervalued. And now we already see the preferreds that are a junior instrument to the convertibles on the capital stack be valued more fairly because it's freely tradable. Yeah, that's broadly, I would say, the reason we kind of started leaning from the convertible debt era that we had as a company into this preferred equity era. And in the last 6 months or 8 months now, we've had 4 different tranches of preferred equity instruments we issued. We had an IPO for each one of them. Each one is now listed on NASDAQ. I think the IPOs cumulatively, we raised $4.8 billion across the 4 of them. We also have active ATM programs on top of each one of them. So now we can actively issue more into the market at the market price. And we've issued another $1.5, $1.6 billion, if I remember the numbers correctly. So we've raised about $6.5 billion of preferred equity. And all of that is sort of adding this intelligent leverage.
That's phenomenal. I love it. And I love the term intelligent leverage, Michael Saylor coming out and kind of coining that term per se. And it's a very important distinction because when people think leverage, they think of the calamities of yore. They think of FTX and Celsius and BlockFi and these other things. But one fundamental distinction that most people miss when they kind of make that base assumption is Wall Street leverage is completely different from offshore Bahamas leverage, right? Ultimately, the amount of leverage that you are allowed to put on for these IPO offerings when you are listed on the New York Stock Exchange is much lower. They're much more conservative. And as you mentioned, in the case of your preferred equity, all of it is over collateralized, right? You guys are sitting on this massive amount of Bitcoin, 3% of the terminal supply, if I'm about correct, and you're issuing hugely over collateralized products for a market that frankly is yield starved as well. To give some numbers for comparison, these are from your Q2 earnings presentation. 97% of institutional capital is mandated to equity and credit. That folks who have these mandates can serve those mandates while also holding a Bitcoin proxy. That's one of the key financial innovations that I think a lot of folks miss. Many people see MSTR as a levered Bitcoin play, solely that, nothing more. Whereas what you guys are doing is much more comprehensive than that. You're trying to hit corners of the market that aren't just underserved. They actually can't hold spot Bitcoin or spot Bitcoin ETFs whatsoever. So speak a little bit to the innovation there and what you guys are aiming to do by creating these vehicles and siphoning this capital from these trapped corners of the market.
Yeah, I'll actually, dive deep into one specific thing you said, which was around the Bitcoin credit part. And I think the big idea over here is it's not just opening sort of the door for people who want Bitcoin exposure that can only buy credit instruments. It's also getting a lot of people on board that just want higher yield. And they don't really care that deeply about the fact that it's being powered by Bitcoin. But the moment that they realize that there is this alternative that they have, as maybe a retiree or, anyone in any sort of different demographic solving for a fixed income instrument, and they see that there's something that offers an 8%, 10% yield compared to different alternatives offering 3, 4% yield, that gets them interested and that gets them to understand how it works. And that gets them to also learn about the risks. And then they see it's powered by Bitcoin. And they still may not become Bitcoin maximalists. They might still not go down the Bitcoin rabbit hole, but they would have a product that is valuable to them, which is the fixed income instrument that's being powered via Bitcoin. And the one to sort of dive deeper into to explain that a bit more thoroughly is STRC, Stretch, which was our latest preferred, which we launched last month, I would say in July. And that's a variable rate preferred, which is designed to stay near par in price. And what it means is it strips away the volatility of Bitcoin almost to zero. And as an investor, you would anticipate that the company and the management team would change the interest rates month on month in a way that that removes the fluctuations in the price and keeps it closer to par. And today the dividend rate is 9%. and it could be higher in the future, it could be lower in the future, but you do know that it compares to 1, 2, 3% for a savings or checking account, or 4% for a money market fund. And that's the big universe over here, where there's a lot of capital that seeks short duration exposure, which is, protected from interest rate movements and what the Fed decides to do. And your principal is kind of protected, does not fluctuate too much. The price of the money market fund does not fluctuate away from NAV too much. It stays close to 100 or whatever the par value is. And that's the intention with STRC, because the other three preferreds are all long duration. So they all are kind of sensitive to interest rate movements. And it was a learning moment, or, you know, process for us to realize that what we introduced into the market does cater to a large part of it, but there are a lot of people and a lot of capital that doesn't want the interest rate exposure either. They don't want the long duration instrument. They want the short duration instrument, and they do not care that it's necessarily powered by Bitcoin. They do not need to be Bitcoin maximalists. And as long as you clearly articulate what the risk is and what may happen, may not happen, and they are happy with that, and they're happy with that variable rate or dividend paid on a monthly basis, then there would be buyers of the instrument. And all of that capital raised via the preferred becomes the intelligent leverage, as we spoke about, and then that feeds the common equity to outperform Bitcoin.
That's extremely well said. I mean, ultimately, interest rate risk in an environment where you have, it looks like the executive branch trying to overthrow the Fed for the first time in history. We've never seen the news that happened yesterday, the White House firing an FOMC member, or at least attempting to do so. We're living in a time where interest rates have to remain at or near zero in order to keep the interest expense manageable for the national government. And so as such, long duration assets, these assets that hold huge amounts of interest rate risk, they become much less desirable. People want to park their money where it is safe, where it is less prone to that huge volatility we could see at the federal level when it comes to interest rates.
Yeah.
Not to mention that fiscal necessity. Go ahead.
Yeah, sorry to interrupt, but what I would say there though is, if the buyers of the other fixed preferreds that are long duration, or the convertible preferred STRK, which is a long duration instrument, if their short term hypothesis is that the interest rates fall, then the price or value of the fixed income streams or the instruments actually rise. As yields fall, the price rises. So you actually might have a lot of buyers of these instruments, not just of strategies, long duration investment or instruments, but also of like the US government or any other corporate bond. A lot of the players are just kind of making bets on where they see the interest rates moving. And so today there might be a lot of purchasers of the long duration instruments just anticipating the interest rate cuts and anticipating the price to increase. And that's okay. But the idea is that maybe many, many years from now, in a different era, if you're anticipating rates to go up, then you are exposed to a risk that you don't necessarily want, which is rates go up and price comes down. And for many people, they don't even understand how this works. Like, many people don't understand what it means for rates to go up and down and for the price to move based on it. They've never, studied a fixed income instrument. They've never really studied bond price movements, and they just want something that's stable in price, that's offering them a constant fixed income stream, just like a savings account or checking account. And now STRC is neither a savings account, checking account, or a money market fund, but it tries to mimic some attributes of it and, offer an alternative which might be attractive to many people.
Absolutely. Extremely well said. And the point you made about financial literacy, I couldn't agree more, right? I would wager to say over 95% of the business school graduates that I graduated with have absolutely no idea what duration is. They think it means length of time. They don't know that it means interest rate risk. And they don't know largely that price is an inverse relationship with yield. And so ultimately, these longer duration assets created by strategy do become a pretty enticing offer if your bet is that rates are going to come down over the next couple of years, because then you could sell it for a huge markup. Extremely well said. I want to get into a brand new topic. I want to talk about investor education and relations. Obviously, you guys are pioneers when it comes to investor relations. You have created this entirely new suite of vehicles, as you mentioned earlier, KPIs rather, in order to explain to investors the exact utility of having Bitcoin on your balance sheet. When it comes to investor relations, what are your core tenets that you try to follow in order to make certain that more people can understand not just Bitcoin, but the utility of a public company like Strategy holding it?
Yeah, that's an interesting question. I think it primarily comes down to explaining what the Bitcoin principles are and what we're solving for, which is, a creation of the common stock instrument that outperforms Bitcoin via the intelligent leverage. explaining the downside risks very clearly and the mitigants of it, and the evolution of this leverage strategy and why a balance sheet today is more robust and more resilient and can withstand a larger drawdown in Bitcoin and a longer drawdown in Bitcoin. And I would say that, end up speaking to so many different kinds of people that come from such different starting positions in their own respective Bitcoin journeys. It's a lot of Bitcoin treasury companies that are trying to replicate the strategy. It's a lot of large existing investors that understand Bitcoin and understand the Bitcoin accretion and the Bitcoin per share metrics, Bitcoin yield metrics. It's sort of new investors that are now beginning to pay attention and don't understand anything at all. And then, we need to start from scratch. What is Bitcoin? Focus on the big milestones for Bitcoin in terms of institutional adoption. And, we try to hit those points very hard on each one of these calls, that why has the world of Bitcoin changed drastically since I would say the inflection point was the acceptance of the spot Bitcoin ETFs in the US in Jan of 2024. And since then, it's just been a string of positive developments. And then we try to, narrate the Bitcoin story for strategy. And then, if we reach that point where we can talk more about the preferreds and why the preferreds are, a great opportunity for us as issuers and also a great opportunity for many investors as buyers, then we get there. So yeah, I would just say it's so many different things. There's never like one talk track with one kind of investor that you're typically speaking to, because it's just so many different people at so many different times. And I would make one interesting observation, which is that there are a lot of large holders that you would see on the cap table for strategy based on the latest 13F filings as well, which, are published each quarter by large institutions that are just passive holders. And so there is a lot of capital already invested in strategy in the form of passive funds that are just either indexed to different kinds of things or have just, sort of MSTR in, a passive manner. And there is no active portfolio manager over there. There's no active manager over there, but it is an institution that's a conduit for many other investors via the institution to get exposure to MSTR, and then MSTR in turn is giving them exposure to Bitcoin. So it's just such a interesting, complex, dynamic world that's moving so quickly. And yeah, it's exciting to sort of be here and get more structure in place and try to do our best in getting the story and message out in the right and best possible manner.
Absolutely. Ultimately, it's a story of meeting people where they are, right? So no investor is going to have the same risk appetite in the same way that no investor is going to, become a Bitcoin maximalist overnight. Everyone's at a different stage from their Bitcoin journey. Some people hold strategy purely because, of its outperformance relative to everything else. They don't necessarily care about the underlying strategy. But over time, generally, the idea is that more and more of those people understand the utility value of Bitcoin as a part of that story. I want to talk about Saylor's prediction as far as the next several years and decades go. He has talked about what he thinks Bitcoin's terminal growth rate will be. In a world where Bitcoin is this centillion-trillion-dollar asset, do you still think that it has the potential to outperform something like the S&P 500? Or do you think that at some level, Bitcoin morphs from kind of this speculative vehicle, this monetary asset, this store of value asset, into something that more resembles a stable money? What's your outlook? This is probably well after both you and I are long gone, but do you think Bitcoin at some stage morphs from that store of value asset into a traditional monetary tool? Or do you think, it just continues outpacing basically everything for, I suppose, the rest of time?
No, I definitely think it has a slow and gradual adoption, first as a store of value across the world. And as the cash balances of people in Bitcoin increase, and eventually it, exceeds the cash balances in fiat dollars or other currencies, then you would naturally see perhaps the acceptance or evolution of Bitcoin as the medium of exchange. And I think it needs to go through that long, long journey of first being adopted as a store of value asset and only then becoming, a quote unquote everyday money and a medium of exchange and then a unit of account. And I don't think that happens anytime soon, maybe 10, 20, 30 years from now, who knows? And perhaps you already know this, but the right framing I have in my mind always is around Gresham's law, which you might be familiar with, which is, bad money replaces good money from circulation. The simple idea that if I hold both Bitcoin and dollars and I want to buy a cup of coffee, And if I believe Bitcoin will accrete more in value and outperform my dollar savings, then why would I spend the Bitcoin to buy the cup of coffee? I'll obviously spend the dollars. So until people actually hold dollars and dollars form a large part of the world's savings and cash balances, and they will naturally be the more commonly used uh, medium of exchange, and it will not allow Bitcoin to be part of that circulation. So it's bad money, fiat, replacing or crowding out Bitcoin, good money from circulation. So I don't think that changes anytime soon. Specifically around outperforming the S&P 500 in the short term and the super long term, I think it's interesting. What will likely eventually happen is, just like every individual will adopt Bitcoin, every company will adopt Bitcoin, and all the S&P 500 companies would have adopted Bitcoin. And just like perhaps you can say that MSTR is outperforming Bitcoin via intelligent leverage, you might perhaps see all 500 companies in the S&P 500 outperform Bitcoin, not just via, a leverage strategy and becoming a pure play Bitcoin company, but just through having successful operating businesses that generate cash flows that are being swept into Bitcoin. And you are now denominating, the performance and returns of the S&P 500 companies in Bitcoin terms. And that is the future. Perhaps you see I don't know how many years into the future. Today we talk about the US government and the Treasury buying Bitcoin on the balance sheet, and it'll be a small, tiny amount of the balance sheet. But eventually you'll talk about central banks like the Federal Reserve buying Bitcoin on the balance sheet. And we went from this era of gold-backed currencies to currencies not backed by anything to eventually currencies backed by Bitcoin. And the problem is that when you start framing these arguments to the layman, they get really confused and they find it really jarring to talk about ideas like the dollar being backed by Bitcoin, or all S&P 500 companies having Bitcoin on the balance sheet and a Bitcoin denominated world. And it's not beneficial. So a better way of framing it is in a way they understand, which is in the last 5 years, Bitcoin has been delivering about 50% annualized returns. It's been a gradually descending kind of annualized performance as the asset class becomes bigger and bigger and the volatility drops as well. And in theory, it should remain a better performing asset than the S&P 500. Is just a superior form of capital. It's a better store of value, does not have management risk, execution risk. It's global capital, it's fungible, it can trade 24/7 freely globally across the world, instantaneous settlement, and it will hence naturally have greater and greater adoption through time. And it will fall from 50% and gradually, let's say, fall down as Michael Saylor predicts. And it's not a view endorsed by strategy. It's Michael's personal view, but I kind of had the great fortune of helping him build part of it. Falls from 50% annualized return to 21% annualized return in 21 years, and the price is 21 million per Bitcoin, or $21 million per Bitcoin, and the volatility is 21% on an annualized basis. So I think that framing helps a lot of people, and then that helps an investor or the normie build a long-term strategy with this view that Bitcoin is going to be the best performing asset that's outperforming everything else, and then build a portfolio or build a company, an institution, a fund that solves for that as the base case for the next 10 years. And I think that is more beneficial than talking about the dollar being backed by Bitcoin or all companies adopting Bitcoin.
Extremely well said. I mean, I would say that half the people in the United States still think the dollar is backed by gold. You'd be surprised. And the other half have no idea that the dollar isn't backed by anything, or that it ever was. So that's a much better way of framing it. The last question I have for you, and thank you so much for your time. I want to ask you about kind of the maturation of Bitcoin treasury companies over the next 5 to 10 years. Ultimately, you guys at Strategy, over at Similar Scientific, over at Metaplanet, you guys are all creating these massive balance sheets of Bitcoin. Ultimately, I believe institutions will be the primary way in which people interact with Bitcoin on a day-to-day basis, at least in the West, 10 years, 20 years, 30 years from now. And so, one of the aspects of my mental model, which I would like to kind of discuss with you and parse out, is, I believe you guys creating these different types of financial instruments using your Bitcoin balance sheet as collateral, that's ultimately going to be the future for every Bitcoin treasury company. They are going to be some of the largest, if not the largest, financial institutions in the world 10, 20, 30 years from now. And they will be responsible for creating the financial products that currently other banks issue and other corporations issue that kind of make the world go around. right? So what's your view on that? What do you think will happen? How do you think these companies, including Strategy, will mobilize their balance sheet 10, 20, 30 years from now? And do you agree with the view that, over that time horizon, the companies today that are accumulating Bitcoin in size will be the largest financial institutions of the future?
Yeah, so I definitely agree with the idea that the large Bitcoin treasury companies today would be very powerful and would perhaps be the largest financial institutions in the future. And you already see Strategy is, I think, ranked number 5 in terms of the size of the corporate treasury across all S&P 500 companies. And I think Berkshire Hathaway would be number 1. I forget how many times the size of Strategy, but it's our aspiration to be number 1 over there. And I don't see why we can't get there in the next 5 to 10 years. And that already shows how powerful or how large and important and influential perhaps Strategy is as an organization. And I would say that, in terms of mobilizing the assets on the balance sheet and what could potentially happen in the future 10, 20, 30 years from now, I think what needs to happen first is as long as there is demand for dollar denominated yield in the world or fiat denominated yield, then there is no need to work the assets. Then, as long as that demand exists, you can simply just issue these fixed dollar return instruments. And as long as your base case hypothesis is that Bitcoin outperforms that cost of borrowing, then you can simply generate that Bitcoin yield and build, intelligent leverage into your balance sheet and have your equity outperform Bitcoin. And it's only when there is no longer any demand for this fiat denominated yield when you need to start considering very seriously what do you do with the assets and how do you work them. And maybe, do you want to be an insurance company? Do you want to be a bank? Do you want to go on an M&A spree and acquire 10 different companies? But until then, I think the playbook is super clear that you build a Bitcoin treasury company and you capture balance sheet arbitrage by issuing dollar denominated debt, and you capture the market premium that comes into your equity because of the expectation of your Bitcoin outperforming the cost of borrowing. And I don't know how long that lasts. Maybe it's 5 years, maybe it's 50 years. But until then, I don't see the immediate need for a Bitcoin treasury company to take counterparty risk and to do things with Bitcoin on the balance sheet. Because right now you have a very homogeneous, transparent, scalable balance sheet that's so easy to evaluate in terms of, building an investment case. Whereas, if you have given out a million loans to different people, and then you have to like assess each loan and the default risk and the recovery rate and the yield on each loan and all of these different things, it just makes it a lot tougher and it's just a different business model. And for now, the way the Bitcoin treasury companies are structured, there's no reason why Strategy can't go from $100 billion to $1 trillion, and why the entire Bitcoin treasury space can't go from like 100, $200 billion to $10 trillion. I think it's a very likely scenario.
Absolutely. I totally agree. And what you're talking about there is a speculative attack. Pierre Richard has said that, this trade will continue until it's no longer viable, right? Until you cannot borrow dollars at a lower rate than Bitcoin's rate of return. And ultimately, companies like you with access to capital markets can execute that trade at scale. It's the most profitable trade on Wall Street. And so I think you guys are writing the playbook and more will follow. You guys have successfully monetized Bitcoin's volatility into, where you guys were in 2022 today with one of, if not the strongest balance sheet of any publicly traded company. So CJ, I want to thank you so much for your time. I really appreciate you coming on. We'll have to do this again. I didn't get to half of what I was going to ask you because your answers were so good and there's so much to talk about. But in the meantime, where can people find more of their work, your work, if they're interested in following you?
Sure. I'm active on Twitter. You can find me at the rate underscore my first name followed by a J, the first letter of my second name. And you spell my first name Chaitanya. But as I'm spelling all this out, I realize that it's about time I change my Twitter handle and make it CJBTC or CJ Bitcoin 8 or 21 or something like that. So let me do that. And perhaps you can, link that to the show notes or something in the future.
Fantastic. Absolutely. Whatever the Twitter handle ends up being when this episode goes live tomorrow, we're filming this on Tuesday, August 26th. That'll be linked in the description. You'll also be tagged in the expo. So go give them a follow. If you don't already, you probably do. And CJ, once again, thank you so much for coming on the show.
Thank you, Joe. I had a lot of fun and I look forward to meeting you in person soon and would love to do this again.
Absolutely. Talk soon.